JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 22nd of February 2021. There we go. So yep, welcome everyone. Welcome to this Monday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page here, which you can always check out on a daily basis as well. So yep, kind of feel free to visit us here on jfdbank.com and as always, click on that research tab right there on the top, guys. So I believe you can find something useful around here for yourselves. Now, jumping into the charts, the first one I want to pick up here is the German DAX, and it's pushing back up. Initially, we did see a drop below this hurdle, the one that I was talking about, this 13,830 zone. It was a brief visit below this area, and as you can see, the bulls stepped in very quickly and drove the index back up here. However, the 21-day EMA is currently acting as a bit of an area of resistance. So let's see if the bulls are strong enough to lift this one higher. But if they do struggle with this, then yep, maybe another slide here could be possible. But as I've mentioned before to you guys, that a break below this excuse me, a break below this area, this 13,830 zone, yep, that's what we need. However, a daily close below this level is needed a little bit more, because what we could be, well, no, not could be, but what we are having right now is just a false breakout. So that's why, if you want to aim for some lower areas, well, wait for that daily close below the 13,830 zone. For the upside, well, I mean, I would prefer to maybe wait for a push above a Friday's high near the 14,026 territory, approximately around there. A nice good pop above this, yep, could open the door towards some higher levels. So keep that in mind. Now, on the other kind of from the other side, from the other perspective, I mean, some of you might be looking at something like let me just quickly put this one on the chart. So some of you might be looking at something like this here. You could be looking at this little short-term kind of downside resistance line drawn from the high of the 8th of February. So if we get a pop above this 14,026 territory, then maybe there could be a little hold up somewhere around here near this downside line. But again, for now, I'm gonna kind of be careful with this line, because again, it might be ignored totally. So that's why we can keep it for now on the chart, but just like I said, guys, I mean, be very careful. I mean, if we get a pop above this 14,026 territory again, then maybe we could go again for a possible test or a revisit of some of these key resistance levels, like the 14,131 or the current all-time high near the 14,169 level. And then we'll take it from there. But that is, of course, if we get a successful move here back above the 21-day EMA. So far, yes, the bulls are trying to push the index higher. However, let's see if they manage to keep the daily candle here today above this 21-day EMA. Now the S&P 500, and Here, basically, the index drifted lower on Friday, and if I'm not mistaken, let me just quickly jump into a weekly chart. Yes, we've closed the week in the negative territory. Now, if we take a look at the cash index right now and where it's currently sitting at, we'll see that the price is balancing around the 3,880 zone, basically below, well below this Friday's close, but still above the 21-day EMA and above this 3,871 territory that I talked about previously. Now, in order to go for some lower areas, I need to see a drop below this area and ideally a daily close below this hurdle as well, because at the same time we could get that close below the 21-day EMA as well. So yep, and also below the highest point of January. Yep, like I said, that's why we are keeping an eye on this 3,871 territory. Currently, the price is balancing around the 3,880. We did get today a brief on the cash index. We did get a brief drop below this hurdle, but let's see if the bears have enough steam kind of to drive this one to the downside again. For the upside, I would prefer to wait for a pop above the 3,931 zone right here and then go for some higher levels. Now jumping into DXY, the dollar index, and yep, we're drifting to the downside again. We're dropping below that 90.25 territory, but if you remember this morning, I said to you guys that wait for that daily candle to stay below this area, and then yes, we could go for further declines. For now, I'm just gonna be very careful here, and I'm gonna keep an eye on this daily candle here. And if we do get that daily candle closing below this, then yes, in a way it kind of opens, or should I say increases the chances for a further drift lower. For the upside, I still need to see that push above the 91.24 territory here in order to go for some higher levels. Now silver, looking at silver, a beautiful reversal here back to the upside, back above the 21-day EMA here on Friday. Today we're seeing kind of a continuation move higher. However, we still remain below that 27.92 territory, the one that I kept talking about. And for now, I would like to see, or should I say not for now, but still I would like to see that push above the 27.92 territory in order to get a little bit more excited with the upside. So, and ideally, of course, a daily candle staying above this area could do the trick for more buyers, because what I don't want to see here is just a false breakout. And for now it's it is how it is, guys. For now, I'm gonna keep an eye on this barrier. I'm cautiously bullish, I would say, on this one, because yes, we continue to balance above all of it, all of the EMAs here. But still, in order to get a little bit more excited with the upside, a push above this 27.92 territory would be needed. Jumping into Bitcoin. So Bitcoin is declining today. So yep, in a way, this could be part of a long-awaited larger correction. However, as you can see, this level here, the one that I talked about previously, this 52,577, did provide very good support today. Previously was seen as a resistance, now it's seen as a good area of support. So if we get a further decline below this area, then yep, we'll go for a larger correction towards the downside here, towards this upside line drawn from the low of the 27th of January. So in a way, this whole move here in this little territory could be considered as a temporary correction, guys. So keep that in mind. But for now, all eyes are on this 52,577 zone. A nice good drop below this, yep, could open the door towards further declines. AUDCAD very quickly here. The pair continues to pop higher. On Friday, we saw the pair kind of and the rate staying here above this highest point of January near the 0.99 territory. Now the big question here is where this can go further, or should I say, will this go further? For now, it is doing the trick. All eyes, of course, are on that psychological 1 zone. And let me just kind of put some levels here on the top. So one of the areas that I'm keeping an eye on is, of course, this 1.0010 territory marked near the highest point of January of 2018. Also marked by the inside swing low here of, let me just quickly put this one on the chart right here, the low of the 9th of March of 2018. Oh, sorry, not the low. I think that's, yes, that's the low of the 9th of March 2018. So yep, if we get this kind of hold up here near this area, then yes, that's where maybe some some bears might step in and reverse this one back down. However, for now, all eyes are on that psychological 1 zone, and well, I mean, it seems that it's on the right track right now, and we could see that test, the long-awaited psychological 1 level could get tested. GBPJPY, very quickly here, the pair is flirting with this 147.96 territory. That's let me just quickly show you what that level was here in the past. Now that's the highest point of December of 2019, guys. So good potential target, or should I say was a good potential target, was a good target. We reached that target, but now the big question here is, can the pair, let's say, remain below this area? Because currently we can see that it's struggling to the rate is struggling to stay above this hurdle. If the daily candle here remains above this area, then yes, maybe we could go for those higher levels. But if it doesn't, then maybe, just maybe, we could see a bit of a corrective move here to the downside. We'll get a little bit more excited with that that idea of a possible correction lower if we get the rate falling back below the 147.56 territory right here, and then we'll take it from there. And finally, your EURUSD. So getting closer to this so-called neckline, the one that I was talking about with you guys. And for now, everything's kind of leaning a little bit more towards the upside. However, let's not rush into anything yet. First, let's keep an eye on this, guys. I mean, it could be very exciting. For now, it's it seems that this idea so far is kind of working out. But again, to be a little bit more comfortable with that idea of a potential kind of inverse head and shoulders here, we need the break of that neckline, which is a little bit on a tilt here. So yeah, and it's roughly near the 1.2156 territory. So a nice good pop above that, yep, could open the door towards some higher levels, guys. So keep that in mind. And of course, if we do get that pop, after that, keep your eyes on the daily candle and where it's going to end, because if it stays above that down this neckline, then yes, we'll go for some higher levels. But if it doesn't, then we'll just get ourselves a false breakout, and then we'll have to just reevaluate everything again. So guys, this was a quick overview of a few instruments, so I hope you found it useful. Thank you very much for joining in and watching this one till the end. I hope you you're having a great day today. So yeah, guys, as always, have a wonderful evening. Stay safe. Join my videos tomorrow, starting off with the Traders Espresso, 7 o'clock GMT time. For now, guys, I hope you have a wonderful evening. Yep, like I said, stay safe, and I'll see you later. Thank you very much, and bye-bye.